Welcome to What's My Thesis? I'm your host, Javier Proenza. Every week, my guests and I share the answers we found to the questions we have. Join us as we explore and expand our worldview through research and ask what's my thesis. And today, my guest is Chris Adler. And again, a guest that I'm not that very familiar with, so I definitely want to get a little bit of background on you. So where are you at, Chris? I know you're in Mountain Time for sure.
Yeah. I'm in Boise, Idaho.
Boise, Idaho. Cool.
Yeah.
I am not very familiar with Idaho that much other than, the things that you hear. And unfortunately, I feel like a lot of media is written by people that think of that part of the world as like flyover country. So
Yeah.
what drew you out to Boise? Just like I literally have no idea what kind of landscape we're dealing with. I'm like completely out of my depths. So I'm trying to get a little context.
Yeah. Well, my wife was born and raised here.
Okay.
So we met in undergrad. She kind of followed me. We did like a long distance thing for a while. She ended up moving out to LA, and then we moved back to her hometown to start a family because we couldn't really see ourselves doing that in LA.
Yeah, definitely. Yeah. I can understand that for sure.
Yeah. And in terms of landscape, which is something that actually does crop up in my work, we're sort of right on the edge of the desert, sort of nestled up against the foothills of the Boise range that goes back into the Sawtooths. So it's like mountains turning into desert and lots of farmland.
Cool.
So yeah, but like almost 1 million people in the Treasure Valley right now, which is like Boise, Caldwell, Nampa. And it's all kind of merging into one as it grows. It's this big valley called the Treasure Valley. But yeah, only like, I don't know, 200, 300,000 people in Boise proper. So yeah.
Cool, man. All right. Yeah. So what do we want to talk about today?
So I wanted to talk about just general, I guess, like financial wellness and how you can do that as an artist. That's kind of been one of my passions.
Cool.
So I'm not sure if that's within the bounds of this.
No, that's fine. I was actually looking around for a piece of paper so that I could start taking notes.
Yeah. So anything from saving to investing to the different styles of investing that you can get into. It's been sort of like a parallel passion of mine for a while. So yeah.
Cool. So like let's say you're a young artist, like, and you're in your 20s. Let's say you just got out of school. You got a bunch of debts. I mean, I think that's a pretty standard. That's the starting point where we can help the most amount of people. So what would you advise them to do at that point?
Well, I would advise you to get a job. And don't try and just be a full-time artist making zero money right off the bat. Don't go into credit card debt. Student loan debt is one thing because it's a lower percentage rate, even though sometimes they can be a little bit high, for sure. But credit card debt is just like something you don't want to get into. So like stay away from that. Try and save your money to pay off those student loans as you can. But really just try and increase, your earning potential, within whatever skill set you have. Because I think like your early years they're what's called super dollars, right? Mm-hmm. So forgive me if I go too deep or use weird terms. And I know that like half of the art crowd is going to hate me for talking about money just in general, but like, I think it's super important. And I struggled a long time with like how to pay bills and all of that. So it's been something that I'm kind of pursuing. But anyway, like your early 20s especially are what's called super dollars. Like every dollar that you invest in your early 20s or even earlier, like those are the most powerful dollars because the power of compound interest will take those and just double them, quadruple them, everything else down the line.
And I can definitely vouch for that because I invested early when in my 20s and it's really like my greatest regret is not investing more because it's like and it happens. I think the compound part of it is that you like it's hard to like conceptualize because there was a period where I was like, oh, okay, this is actually doing pretty good, and then like 10, 20 years later, I didn't realize like it would just increase in like distance from like I was like, oh. I was assuming the compound element of it. It makes it it's like it's hard to quantify until you like see it grow. Like it's literally money making money by itself. It's fucking insane. So
Yeah.
yeah. So I definitely like, well, okay, then what would be the strategies for someone my age in terms of investing? You know,
So what,
like
like
I'm
23?
41. So like, let's say that I'm, you know, I mean, I'm not in the position, I guess let's do it for somebody that has no experience, because I'm sure it'll apply. But like if you're 41, obviously you still want to get into investing even if you've never done it, right?
Yeah. Yeah. Well, obviously I guess I should declare I'm not an investment advisor. So none of this is investment advice at all.
Yeah, yeah.
Just from my personal experience. But yeah, I mean, at any age, you can start investing. And I guess you can look at that in a ton of different ways. But the way that most people are familiar with is through, the stock market. And through equities in particular, rather than other types of debt or like bonds or something like that. But buying into an index fund is really like the way to get exposure to like the broad market and just sort of put a little bit in as you go. It's called dollar cost averaging. Don't save up $5,000 and dump it all in at once. Put $100 in a month or a week or whatever you can afford. And as you just buy that same index fund over time, little bit, and it'll guarantee that you get the average price of the market over the period that you're buying. Right. So it's a safe way to say, hey, if it drops next week, great. It's on sale. I'm just going to keep buying. And then if it goes up, fine. It's a little more expensive. I'm going to keep buying, So,
yeah. So you you average out like where you buy in.
Yeah.
Essentially. Yeah.
Yeah.
And
over like a set period of time. Yeah.
And just to clarify, what's an index fund?
An index fund is just like a basket of stocks. It's one stock. So it'll have one ticker, like VOO is the one that I like a lot. It's a Vanguard fund that tracks the S&P 500. So it has every stock in the S&P 500 in that fund, but all you have to do is buy one symbol, one stock. So you just put in $100 into VOO, and you now are invested in the overall market, the S&P 500. You get full exposure. So it's a balanced, investment product, basically. Or not balanced. Okay. It doesn't have bonds in it, but that's a different thing. But yeah.
Yeah. So. What about, so then are you familiar with other kinds of investing? Are we going to get into crypto?
We could. I do have some crypto. Absolutely. That's one thing that I'm not dollar cost averaging into, because I do see it as really risky. And I just happened to have put some money into it about 5 years ago when I was in LA. And that's grown a lot, but I just like don't even look at it, or I try not to look at it, because it's like weird money. I just don't like,
you don't want to get emotional, have the emotional highs and lows.
Yeah. It's like, a couple $100 turned into like a few thousand. And now I'm just like, I don't want to look at it, because it's like, I'm not really like invested in it. I didn't think of it for 5 years. And then all of a sudden, so anyway, I wouldn't really. Yeah. So go ahead. Yeah.
No, that whole market is interesting, because you have the diehard true believers of Bitcoin, and then things happen like what was recently been going on with, what's it called? I think Tesla stopped paying people in Bitcoin, and that like was like,
it.
Yeah. Or stopped accepting it to buy cars. So it was like, I don't know, man. A lot of the rhetoric that I hear from like the true believers is that it's like, it's decentralized, there's no government involvement, and I'm like, yeah, but that just I'm worried that that's going to lead to more anarcho-capitalism than like utopian society, right? Like now the powerful richest people in the country and companies have even more power to like manipulate this like unregulated currency. So I don't know. And then NFTs started to fucking tank. It's like, it's so crazy. Like, NFTs are an entirely different game too. They're just like,
I can't even begin to, I mean, it was crazy to see that market just take off and then like collapse, like very much like Bitcoin did in 2017 when it hit 25 grand and then immediately plummeted,
Yeah.
And then now it's coming back. So maybe the NFT market will follow the same trend. I'm sure it will start to come back again.
Yeah.
But yeah, it's, I mean, and the NFT market is, I attended a talk or a panel discussion put together by Christie's on NFTs. And it was really fascinating to me that Christie's was choosing to host this panel because what NFT does is cut them out of the mix. Right?
Oh, wow.
Like the entire idea of an NFT is to like take out the middleman, right? Because they're like transmittable over like an online platform from user to user, and like artists always get a cut of the share. And like, that's something that auction houses have struggled to like actually implement. I know that there have been manifestos and things like that people have signed saying like artists should get a cut, but like until the NFT, artists should get a cut of secondary sales, down the line. But until the NFT, there was no way to actually implement that. Mm-hmm. So now that there's like this P2P transaction, like people are freaking out, or the institutions are freaking out on how to maintain that control, how to maintain that centralization, right? Same thing with big banks and crypto, right? It's freaking them out. And it's why places like China are banning crypto. It's because they want to have control over their currency.
Yeah.
And
it's
so
crazy too, because Venezuela has the petro, which is like, which is wild. Like, and that's backed by all their natural resources, which we're trying to like actively take from them. Right. So it's fucking the whole thing. It seems like a more volatile like stock market, and then you have these exchanges and like you said, I think one of the guys that runs one of these exchanges, I forget which one and who, that's how well researched my knowledge is on this, but it's he was saying that like, the governments are gonna start cracking down on this shit because they don't like it. They don't like that they don't have any say in it. So I don't know, it's an interesting experiment, and it's definitely, but like in terms of young artists getting into it, you be very careful, like, and just because people say it's the future doesn't fucking mean it is. You know what I mean?
Yeah. I mean, there are always bubbles before mass adoption, right? I mean, look at the internet bubble in 99.
Exactly.
And that popped in a major way. And now look at the tech stocks. I mean, like, like a lot of what's sort of accepted knowledge of like what's going to be a big thing during the first bubble dies off, right? So it's like all these big companies like Yahoo or whatever just like basically disappear, and then other things like, whatever, Okta, all these like internet security stocks are now like the new tech. And they get replaced. It's like kind of like the first one off the ship sort of, get shot, right?
Yeah.
So it's like the earliest mover in the space oftentimes is like the one to go down. And so,
and then like the next generation is just like entrenched. It's also MySpace and Facebook and yeah, definitely. And then the thing that was funny to me was like in there was a period right after Apple invented the iPhone where everybody was like shitting on them because they weren't like making the next iPhone, the next product that changed the fucking world.
Yeah.
And so,
except they kind of have with like inventing the watch and like now these things that I wear, like it's crazy.
Yeah. But I mean, in terms of like how revolutionary that thing was, and then the iPad and everybody poo-pooed, it's just so funny to me, just like I mean, I guess that's indicative to how these bubbles form in people's minds, right? They're like, well, we've done it, like now this is the normal, we're just going to innovate and like, and then it leads to weird shit where it's like, like fucking Uber and all of those things where they're like, disruptors of like of the market.
I mean, it's funny, like people always talk about like, oh, it's just art for art's sake, like why are you doing that? It's like one of the big discussions is like this masturbatory practice of like you're just making art in a vacuum, nobody gives a shit, but it's the same thing when it comes to tech. It's like disruption for disruption's sake. It's like no, we didn't need to disrupt that, like it's fine, like like water pumps work, we don't need to like reinvent a simple you know what I mean, like little things. Whereas like all of a sudden people are reinventing toilet paper, or I don't know, maybe toilet paper does need to be reinvented.
I think what people are excited about, what makes it like disruptive, like basically what they're saying, it's just the Amazonization of everything. Like he did it, so now everybody wants to fucking fuck everybody and be the guy, you know. And he just bought MGM. It's insane. But anyway, going back to investments. So like, what kind of strategies would you have people like? How would you approach this? Like, you know, like let's say you have a young artist and they like are really into this, you know. I mean, I'm tend to shoot the shit, but I want to get back on track because I think that there's valuable information.
Yep. So first of all, a lot of what I did is work for other artists. Like when I was in LA, so you're gonna, you know, you might not have healthcare if you might just be sort of like a contract, like a contractor or a, you know, working on a contract basis with an artist for an artist studio. You might have like a lot of different sources of income, and you might not have like a W-2 job, right? So in that case, if you're self-employed, you should probably start your own company, like an LLC or something, so that you can charge through that for tax purposes. But even if you don't do that, any earned income that you have, you can open a Roth IRA. That's a retirement account that you don't have to have a job to open. You know, you don't have to have a job to open that style of account, right? Like for a 401k, that has to come from a W-2 job that you have.
Yeah.
So if you have one of those and you have a 401k, max that out, invest through that. That's great, because a lot of times employers will match what you put in that. But if you don't have a W-2 job and you're just like shooting photos for a gallery here and like installing art over here and like building little paper, you know, figurines for another artist to put in their work and sell to, you know, for thousands of dollars, and you hate yourself for it, then like open a Roth IRA, and all those little streams of money that come in, you know, you can put that into a Roth IRA, and that's after tax dollars, right? So there are two different types of retirement accounts that you can open on your own. An IRA, well, two basic ones: an IRA, a traditional IRA, and then a Roth IRA. A traditional IRA, you can put in pre-tax dollars, right? So before you pay the government, you put money in, but then you have to pay taxes when you take it out when you're 59 and a half, which is, you know, that's sort of the old school one. And I think the best one to do is the Roth IRA, where you pay the government their taxes up front. You say, take 20, 30, whatever percent of my money. And then you put the money into the retirement account, which you can't take out until you're 59 and a half. But then when you take it out, you pay zero taxes on it. It's free. It's great. Because you already paid it. So it's amazing. All that money that gets to invest over time, over 34 years, however long, you pay zero taxes when you take it out. So it's not like you're growing this huge nest egg and then you get whacked with a tax bill like in the traditional IRA. With a Roth, you're growing, and then you get to keep all of it. So that's a really powerful tool.
And then, and so the Roth IRA, you can't take anything, or you get penalized, right, if you take things out. So then that also helps you discipline yourself, right?
Totally. Yeah. It's and you know, the penalty is not like crazy. It's like 10% if you take stuff out, and which sometimes I think about, and I'm like 10%. Like, I wonder for quick access to cash, like, because in my mind it's like you never touch that money. But then like when you think about like a 10% hit, it's like, oh, if I got 90 cents on the dollar, sometimes you might be willing to do that, and you can. It's not like someone's going to send you to jail if you like, you know, loot money out of your own Roth IRA. But it's definitely best not to. You want to leave that money in there. Don't touch it, you know, until you're 59 and a half, and you can actually take that money out. And there are certain scenarios where you can take money out, like for your first house. I think you can take money out of your retirement account with no penalty up to like $10,000 or $20,000 for a down payment, which is like, you know, will get you only so far these days. I'm not sure of the actual numbers, but I know that there is like some sort of exemption where if it's for a down payment for your first house, you can use that money in your retirement account, or take it out of your retirement account to use it. And then you can also like take loans against your IRAs, but that's sort of a more complex thing that I haven't done or wouldn't really recommend. So.
What happened is to your dividends? Are you allowed to pull those out, or they just keep growing and growing and growing?
Yeah, they just go right back into your account and they sit there. If you pull anything out, then it's
can you use the dividends to reinvest?
Yeah,
without
absolutely.
being
Yeah,
penalized? Okay.
that's a great point. And I would, yeah, because the dividends, you hold a stock in your account, the dividends are just sort of spit out of that stock and into
Yeah.
your account as cash,
Yeah.
right?
Yeah.
And there actually is a setting in every brokerage, where you need to go. What I recommend doing is to automatically reinvest those dividends. So it just basically you get paid in stock, right? Instead of, so you buy 100 shares of VOO, and then you get however much the full total stock market is paying off in dividends. That'll just come to you as like every quarter or whatever. It'll come to you as like 0.001 shares of, whatever it would be in shares. Like you'll just get that amount in shares.
And
So,
what's it called? For like the young person that has no idea, and this is the first time that they're like hearing this, like, why do this? Why not just like stash your money into a bank account and just keep stashing it into a bank account? Like, why would you want to even do this? Like, obviously, we can get into like the benefits of things like dividends because you can just make passive income, which is amazing, right?
Yeah.
But yeah, why would people do that?
Well, you'll get eaten alive by inflation. So if you think about it, if you were born in 1950 and think about how much like, a sandwich costs in 1950, I mean, I don't know, like what, 50 cents or something, who knows?
Gas used to cost
like,
a quarter.
yeah, exactly. And like, if you were saving your wages from 1950 all the way to 2000, you're going to be saving that like $3 an hour wage. And then all of a sudden things are getting more expensive. Like the cost of living is going up, but your money is not going up, right? Like every dollar you make is just stationary and it's getting eaten slowly into by that. Generally, inflation is an accepted number, is about 3% a year. So you're losing 3% a year on your money if you're not investing it, right? So you want to do something with your money that'll at least earn you 3% so that you're pegging along with inflation and not losing money at the very least. Right. So that's just the core reason why you want to be invested, even if it's in a very safe instrument, like, even like a bond index, which is like, that's, corporate or government debt, issued by companies that you buy, and that gives you a payment. It's a very, very secure way to invest. It's not like equity in a company where it'll fluctuate a lot, like a bond you're going to like buy, and then it'll pay you out at a set agreed upon rate, like right up front, right? It's like similar to like a CD or something. But anyway, even if it's in a very safe instrument like that, you want to do something to where you're not just like putting that money under your mattress and like having it eaten by like the termites of inflation.
Yeah. And is this so in theory, basically even a savings account is better than nothing, right? Like
well, yeah. Savings
what do you get on a
accounts
savings account?
Are paying you like 0.01% right now. It's because
really? They've gotten that bad?
They basically pay you nothing. Yeah.
Oh, okay. I haven't used one ever. Yeah. So
now, you can. Yeah.
Go ahead. What's a better option? What would be the bare minimum then? So like if someone wants to do the safest thing, the bond index or the CD?
No, actually the bare minimum I would recommend, there's a lot of small credit unions and now even apps that will offer something that's called a high yield savings account. And basically those will pay you somewhere between like 2 and 3%, basically pegging to inflation. At the very minimum, put your money with like a credit union, not like Chase or Wells Fargo or something. Like if you're not going to invest, if you are going to invest, you can keep whatever money you use for your daily life in a bigger bank. That's fine. And it's earning nothing because you're using it, right? It's like your operating account. But if you're not going to invest, if you're just going to keep a lump sum of money, put it in a high yield savings account. It's safe. It's backed by, FDIC. And oftentimes what these small credit unions will do is they'll make you that return by lending the money out to your local community. So it's actually a really positive force. A credit union is just a great thing. Like they literally give small business loans to like your mom and pop bakery. Like that's how small businesses survive, is going to these credit unions, right? Yeah. A lot of the time. So it's actually like a really good way to support your community while also earning a little bit on your money if you're not comfortable with investing.
Yeah. So then that we sort of covered that. any knowledge on land investing, anything like that, or are you like where are you most comfortable investing? First of all, let's so that I don't ask you questions outside of your bounds. Like what would you say that you invest in generally?
I invest in stocks and in real estate.
In real estate? Okay, so do you own properties?
I do,
crypto?
yeah. Mm-hmm. Okay. I have 3 rental properties actually.
Okay. How and then before we get into that, now that we have the parameters, can you explain, because you touched on the S-type corporation,
LLC.
LLC, sorry.
Yeah.
What's the difference between an LLC and an S-type? Just out of curiosity.
You know? I'm not a lawyer.
No, it's okay.
It's I think that they're both flow through entities where you I don't know, you know, okay, let's just talk. The LLC is just like the basic one that you want to set up. That's like, it's like very simple to set up on your own. An S corp you can set up, but I don't really know what the benefits.
No worries. Let's just talk about LLC.
So yeah. Yeah.
But LLC, so what are the benefits of doing that? What are you actually doing? You know, there's liability protection, there's other stuff like that. So like, why would someone do that? I mean, that's a big popular thing out here in LA. So I'm not surprised you did it when you were out here. A lot of actors, a lot of producers and stuff like that. They work for entities and then they get paid to their own entity and then they pay themselves out of that company, right?
Yeah. 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 Well, it allows you to take, you know, basically deduct off of your earned income for any of your expenses, right? So any business related expenses, you can say, hey, I didn't actually earn that money because I spent it on equipment that's related to my business, right? Whereas like, if you were to just pay yourself and then go buy it, like I'm a photographer, if I were to just pay myself and then go buy a new camera, well, shit, I just spent that money, you know, and I would have to pay taxes on it first before I spent it, right? But if I buy a new camera and it's a business expense and I use the money from the LLC directly, I could still own the camera, right? Same end result, but I can say, hey, instead of making X amount this year, I can take that $3,500 off of the top and say, I didn't actually make that because it was a business expense.
And in that sense,
I don't have to pay taxes on it. Yeah.
So you're spending pre-tax money, which means that you have more money to spend because you haven't been taxed on your income, right? So that's a pretty dope. I'm actually in the process of trying to figure out how to do that myself, but I'm not gonna ask you for like legal advice. But no, I'm kidding. But definitely no. But it's. I mean, these are important topics because I probably should have done this shit a long time ago. I've been an independent contractor, and in fact, when COVID hit, I had been an independent contractor for so long that I didn't qualify for unemployment. The only thing that got me fucking through was the fact that I had invested anything, you know, and some help. But like, you know, majority of it like was like, fuck, dude. And what's it called? But yeah, I was able to buy a car just on dividends, and that's when I was like, hey, good shit. Hey, younger me wasn't always an asshole, you know. Yeah, I mean, I bought a salvaged car, but I didn't, you know, like it was like a fucking lifesaver. I didn't, and again, it was an account that I hadn't looked at in ages, and I was like, when did the fuck, like, you know, the companies started increasing their dividend output. So I want people to understand, like, you could literally live just off of dividends. If you start off early enough and you invest enough money, you can, like, I literally have a yearly dividend income that I look at. It's not like tremendous, so don't come rob me. But like the you know, over 7 years, like it added up, and I was like, oh shit, I'm like actually not in a position where I can't afford something. And there was also like an insurance payout, so I bought something nicer than I had, you know. Nice. But
yeah, I mean, you know, that's great. Again, I would recommend to reinvest those dividends. If you need the money, definitely take it and buy that car.
Yeah. No, but, I would have done. I definitely would have done that. I just hadn't checked the account. You know, like it's one of those things where it's like, I just didn't even know that had happened. It happened, and like I was like, "Oh shit," because I have no awesome. Interest in pulling any of that money out. But up until then. But yeah, definitely. And then what's it called? So then, what do you know about like building a decent credit and all of that? Like, how long does it take to build like a good credit score?
So, I mean, I've mostly had decent credit. I did actually take a dip about a year ago when I bought one of my properties, because it like dropped my debt to income for a period of time because I took on another mortgage. And but then it quickly climbed back up, like as long as you're making your payments. I'm not a total expert on credit scores. All I know is that you want to have a low credit usage ratio, which is basically, if you can, I mean, I know this is crazy, but like the ideal is to keep your credit usage below like 10%, right?
Of your income,
which is like not possible for a lot of people. No, but basically, like if a bank says, I'll give you a credit card that has a $10,000 limit, you don't want to use more than $1,000 on that credit card.
Okay.
Because that's what banks will look at your credit utilization to see, oh, this person really needs our money, you know? And then they won't, it's like this crazy backwards psychological game where it's like, they'll increase your limits if you don't use your credit that much. Like all of a sudden you'll just be like, oh, well, we've increased it to like 10,000 to 12,000 because we see you're only using, you know, you like don't really need our money and you pay it on time every month. You know, it's weird. But then if you need the money, if you're using $8,000 of your 10 grand limit every month, and they're going to be like, no, like we're not going to give you more money because you might like use it and not be able to pay it back. So it's tough. You want to try and keep that ratio of like what a bank says you're allowed to spend to what you actually spend. You want to keep that pretty low if you can. That's going to help your credit. I know that much at least. So, and then just in terms of credit cards, you don't want to ever carry a balance on your credit card, right? Like you want to basically spend the money over the course of a month and then pay it off at the end of that month, right?
Okay.
That's a place where you want to get to. Like if you're currently carrying the balance on your credit cards, you really want to make sure that you're not just paying the interest on that and letting that grow, because that'll like suffocate you. So you want to like pay that down and get to a place where you're literally, you can pay for something 30 days. You can pay for something and then pay your credit card company back in 30 days for it. But that's the most amount of time you want to let go, basically.
Yeah.
You don't want to like have the balance of a new TV sitting on your credit card for 6 months. That's going to it's going to cost you way more than the TV ever did, you know?
Yeah.
So.
And if you have like, let's say you have 10 grand full of worth of debt, and you have like, what would you say? What would be the starting point? Would you want them to start investing, or would you want them to like focus on paying that off? Is there a situation where your debt cancels out your investments?
Yeah. So I guess before you do anything, pay off your credit card debt, like 100%. Specifically credit card debt.
Yeah. Okay.
Yeah. If you have student loans and other stuff that's like a smaller interest rate that you can manage, that's not like drowning you, then that's sort of longer term debt. You know, like a mortgage is similar to student loan, rates, where it's like, you know, anywhere depending on the market and where who you went to get it. It can be between like 3 to 5% or even 7% for some student loans. I know maybe some of them are higher, but that's a little scary to me. But if it's like in that range and it's long-term debt, like you're okay to pay that off slowly. But if your credit card is like 17, 22, 25% interest rate, that's insane. You need to pay that off immediately before you do anything else. Yeah. So yeah, if you're carrying debt at all, like make sure you focus on like, make a schedule for yourself, live below your means, save as much as you can, and just knock out that credit card debt immediately, like first thing you do. So, yeah.
And if, because I think that like is a mathematics that a lot of people don't necessarily try to do, where it's like 17%, if you could get an investment that got you that return consistently, it would be insane.
Yeah.
You would be Bezos.
Yeah. That's the exact thinking that you need to have, though, is like you could, if you have a mortgage that's 3% or whatever, well, you can earn better returns in the stock market than what you're paying on a mortgage. So you look at that spread between what you could earn with your money and what you're paying on it in order to have that money. Do you know what I mean?
Yeah.
And I guess the mortgage isn't the best idea, but like, well, now, I mean, I would never recommend taking out debt in order to invest in the stock market. I guess let's just start right there.
Yeah.
No, but in terms of just looking at what sorts of debt you have versus if you're free to like spend your extra money after you paid your monthly payment on your mortgage or whatever, then you could feel safe to go and invested in the stock market. So,
well, in the 90s, there was this weird thing that happened where it was like the idea of refinancing your home, and like, you know, it's like all of a sudden to keep up with the neighbors with all their fucking fancy toys, everybody got sold on this idea of like, hey, you have equity. And it's like, you know, I definitely think that people think of homes as assets, and they can be, but they can also be fucking huge drains on you, right? Like, you have to really fucking set yourself up correctly, because you could easily lose money on a land investment, you know, and there are people out there that will fuck you on that because that's their business model, right?
Yeah.
So it's like, I think that there is something to be said. I mean, when you invest in a company and it fucks you, like, you know, like let's say Enron and all of those like huge companies who have done that, like, at least you can sort of like hedge your bets. But you can really fuck up your life. Like, I mean, that's kind of what happened. That's what the 2008 crash was indirectly about, right? Like, years and years of people just thinking of their money as equity. The other thing that's not that, okay, the word I was thinking about, your house can be a liability, and because it is going to be a drain on you. You have to upkeep it, you have to maintain it, all these different things. And so there's a lot of like notion, you know, like our society is definitely built to benefit people that own property, right? Like from the beginning, right? But it can also fuck you in the process of doing that. Do you have any advice for people like having, as someone that owns several properties, what to look out for, what to avoid? Again, this is not an advice show. This is a pique your interest so that you can learn more about it later, right?
Do your own research. Or engage a qualified advisor. But you sound, by the way, like you've read Rich Dad, Poor Dad. You're using a lot of those terms.
Yeah, I mean, back in the 90s, that was the fucking thing. Yeah. No, well, the thing that I read that was really helpful, which I got from him, was Beating the Street by Peter Lynch. That investment strategy paid off a lot. So what his whole thing was, you pick 5 different stocks, and one of them is going to do really well, one of them is going to do really poorly, you know. But I mean, like, literally, this is all like Oprah Winfrey kind of fucking knowledge, right?
But
like,
it's not like those books are famous for a reason. They're really good information, you know?
Yeah, it's like, I mean, I guess they're kind of pop is what I meant, right? Like, but the information is valid. I mean, it has been a success for me. Like, I should have taken it seriously, right? And I think because I got it from these places, I didn't necessarily understand the power of what I was doing until compound interest kicked in, and I was like, holy shit! Like I said, I wasn't a complete asshole.
yeah, absolutely. Yeah,
but
no, it's like the same thing. It's like, you know, Salvador Dali is an incredible painter. I love his work. You know, my MFA would teach me that like maybe he isn't relevant in contemporary art discourse anymore, and like there's other artists that you should be looking at. But it doesn't change the fact that like that work's incredible. It's kind of the same thing with these books. It's like Oprah probably knows who Dali is and loves Dali's work in the same way that like she knows who Robert Kiyosaki is and knows who Peter Lynch is and loves their work. You know, she's not reading high economic theory, but like you don't really need to, you know, if you're just trying to.
Well, I also think that the thing with Kiyosaki is that he was like
maybe she is. I don't know.
I think the problem with Kiyosaki, and the reason that I am aware of, like, he did do sort of like that, like, I can make you a rich guy seminars that were costed like a ridiculous amount of money, and that's where I'm like, you know, like the information is good, but then like once you start to make it a paying cult, that's where I'm like a little bit like uncomfortable with it, and I think that that's not like an unvalid hesitation. I wish I hadn't, because but I mean, I only read like that one. I think once I got like I've repurchased Peter Lynch because I'm like, fuck, dude, that was actually, I should really like reassess that. Taught me how to read a balance sheet. It taught me, you know, and the basic idea being that you don't want to invest in anything that's that you don't fucking understand. Like, you know, like if people are like, you know, like back in the day, biomed was the fucking hot shit, right? And he talks about that. Like, you don't understand, you know, I ended up investing in companies. I'm like, oh, it's basic. Like, you know, like I understand what they do. I understand the product that they sell, and I know what the fuck they're gonna do. You know, so it's interesting because it's a different approach than the index fund, but but it's similar because it's just it's a one person hedge fund essentially, right? Like, yeah. So
Well,
anyway,
yeah.
what are your sources of education? Did you read Kiyosaki?
Yep. Read Kiyosaki, read Peter Lynch. Invest in what you know is like so central to. I mean, that's how I don't only invest in index instruments and ETFs, but that's what I recommend for like a beginner just to get some exposure. But yeah, like I totally follow Peter Lynch's model, like invest in what you know. I actually think the same way that Kiyosaki is a little bit weird with the services he offers and stuff. The Motley Fool, you'll see their terrible advertisements everywhere. You know, take our seminar, free this, free that, and then they want to charge.
Oh, Peter Lynch's Motley Fool?
No. Sorry, I made a jump there. But the Motley Fool is actually an amazing source of information, and they have like the Motley Fool's, what is it? Motley Fool and investment guide for beginners, something like that. I can't read it. It's over on my shelf. Fantastic. I've had that book for years. I've read it a few times. It walks you through exactly what their investment thesis or investment style is, which is basically like, you know, it's similar to Peter Lynch. Invest in what you know. Pick things that have basically like long-term bets that you see are going to be not something that you're just thinking about like how it's going to do next year. You want to really focus on long-term, like asymmetric bets. Like you want to make sure that there's good management. You want to make sure their balance sheet looks good. You want to make sure that they have an edge in the market, and they call it a moat. So lots of different things. I'm not doing a good job summarizing it, but
but that's fine.
Yeah. So definitely, if you're into that, read those books. You can pick your own stocks. They're big proponents.
It's not
of,
fucking hard. It really isn't.
So
like I think that there's truth to the fact that there's some that are gonna do much better than others that and like are gonna fucking blow you away how well they do. There's some that are just gonna out of 5, you got one that's gonna kill it, one that's gonna do, 2 that are maybe gonna do okay, one that's gonna do shit, right? And that, but it averages out, and you never fucking know. It's like it's a wild thing to think about. And I started investing when I was 20, and I'm 40, and I'm definitely like, bro, I got pretty good returns in 20 years, and I'm gonna be 60. I want to fucking retire someday. So I'm like, okay, I'm gonna bust these books out. So it's good to talk to you and refresh on some of these ideas, because they're really exciting. Like, and it's one of those things that like I totally understand. This sort of sense of like it being douchey to like some people. Like I get it, because there are a lot of fucking douchey people involved, right? Like Occupy Wall Street was legitimate and all of that. But at the same time, like I am a leftist, but at the same time, bro, fuck it. Like I also invested in the stock market, right? Like these are the tools we have. We live in this society. We can't like be fucking utopians in our heads and starve, right? Like having a little a capital yourself. Like, there's a lot of people that are capitalists without capital. At least be a leftist with some capital, like, because bro, this world will fucking eat you up. Literally, your money loses value the second you get it.
Absolutely.
You're paid and it's losing fucking value. It's insane. It's craziness.
And it's a necessary evil we all have to live with, but like we're not going to change the structure of like contemporary late capitalism. Like it's just not like maybe in like 50 to 100 years things will be different, but like right now you got to eat, you got to like make sure that you can retire, you got to like figure out your life, because and then you can go and be an activist if you want, but like you do need to play within the bounds of the system that we have today, so
definitely.
Yeah.
Well, cool, man. This is really fascinating. Any other thing? Did you want to like maybe touch a little bit on crypto, since that's the one area we haven't really covered? We kind of talked about how crazy it is, but we haven't really like talked about strategies that people could research. Not strategies that people could implement, that people could look into, because it does seem like an overwhelming thing. And like my cynicism is just like, it's not letting me like play like, you know, allow myself to think that this is the new society, you know. But
Yeah.
like, how can you do it without like fucking hurting yourself?
Yeah. So you can absolutely, I mean, there's just like the tricky part is with crypto is like, there's so much good and bad information out there. You know, there's, for instance, like in real estate, there's a ton of good information just if you like YouTube it, you know, or you can ask, because it's been around for so long that people generally have figured it out. It's not a hard industry. Like, it's simple, right? You like buy a thing and then like you own it and then someone pays you to live there. You know what I mean? Like it hasn't changed in like 1,000 years, right? For better or for worse. But with crypto, it's like there's so many different people out there trying to like build followers by professing this sort of opinion or not. So like you have to really be careful where you get your information from. And I honestly don't know. Like if I hadn't dabbled a few years ago, 5 years ago, I don't know that my risk tolerance is there that I would be putting money in today.
Yeah.
Just because that's one thing that you really have to think about is like what your personal risk tolerance is. Like, can you sleep at night if your money loses 20% of its value, you know, or whatever money you put into the crypto market or the stock market? Will you wake up in hot sweats? You know, like you have to know yourself, right? So, I mean, that's one thing I would recommend is like there's a lot of things online that will, like a lot of surveys online, just look for like a risk tolerance survey and it'll kind of tell you if you're a more aggressive or a more conservative investor. It'll like ask you a bunch of questions and you can try and figure that out for yourself, like before you even take your first step. And then if it turns out that you're a super aggressive investor, then maybe you want to look at crypto, you know, and if you do, yeah, like I would recommend staying away from like the meme coins and all that, which are just like popping up every single day and have like just so many people pushing them with zero, you know, fundamentals behind them. I mean, the shaky fundamentals that Bitcoin and Ethereum do have, I think are more established than a lot of these like smaller coins. So I guess I would stick with the blue chip cryptos. So yeah, I mean, the basic the fundamental like winning point for Bitcoin is that it's been around the longest and that it hasn't been like hacked or misused. Like it's a stable system today. It's not very efficient, right? Obviously the energy concerns and the transaction fees and the time it takes to do a transaction. It's not really the most transactional currency. That's why it's really not a currency, because you can't really use it to buy coffee. It takes like 30 minutes or longer for somebody to get the money, you know? So it's tricky in that way, but it has been sort of proven as a store of value because it's just been around the longest. So that's really, you know, its best attribute. And now the fact that like institutions are jumping on board it's basically like it's this social contract really now that like people just believe it has value. And so it does, you know, and there's a limited supply. That's another fun. There's 21 million Bitcoins that will ever exist. You know, it's not an inflationary currency. It's not like they're going to issue more money as it goes. It's capped, right? So there's a limited supply. Theoretically, that should help keep its value up. There's a lot more that goes into like how the people who are mining it are supporting the system and how they get money out of that pursuit. But I think, yeah, that's the one thing that's in Bitcoin's favor is just like, it's got, you know, the longevity behind it and sort of the industry support now. With Ethereum, though, that actually has real applications where you can build other coins and applications on top of its network, right? So it has like an Ether network that then you can build other applications on that utilize little like sub-transactional coins that you can build on top of Ether to do little minute tasks. And there hasn't
like what kind
really
of tasks? Sorry.
Yeah,
I'm just, we're kind of in an abstract space, so I'm trying to follow.
Yeah. Well, a lot of coins that have been built, like DeFi, for example, decentralized finance, is one big application that like the Ethereum network is being used for. And it's basically like new coins that are popping up that are specifically focusing on transactional speed, trying to help like different industries actually move money quicker.
So then it's so when
like
it's
settlement.
Okay, so let me see if I'm understanding. All right.
Yeah.
So then you have you have the Bitcoin network, which is all the nodes, right? That
Yeah.
track that keep the blockchain going, and make sure. So then there's the Ethereum has its own. It's called Ether is the network.
Ether is the coin. The Ethereum network is,
Is the okay. So
yeah.
then you're saying that in that coins in that network they're testing different ways of implementing the currency, and it has different names. Is that
Yeah, so there are a bunch of like the Ethereum network itself has what's called smart contracts built into it, and you can use those smart contracts to build entirely new coins within the Ethereum network that
okay?
basically operate on the Ethereum network, right? And there's like now this entire subset of new coins called decentralized finance, or DeFi, that are all built on like the ERC20 protocol. I think ERC20. There may be a bunch of other protocols that I don't even know about, but that are all basically built on top of, it's like building an application on top of the internet or something. It's like,
Okay.
like there are a ton of like web apps that now work because we have the internet.
Does each coin end up with a different blockchain?
I don't know. I'm not sure.
Okay, no, it is interesting. No, well,
Yeah.
okay, so here's some things that I have, like skepticisms I have about it, and
Yeah.
you can help maybe debunk some of them. I've talked to some. It can be hard to talk to cryptocurrency people because like they get passionate about it, and they get angry if you just like show any skepticism that you would show for anything else, right?
Yeah, right.
Because it's like, this is the future, man. Why are you shitting on the future? Right? Like, but okay. So there's a misconception, I think, in society that we have a social contract and that's what gives money its value. That's a complete falsehood. What gives money its value, gives the dollar its value. What gives money its value is sort of the fact that the U.S. dollar is the reserve currency, and that we have a huge, expansive resources extracting network of people that topple regimes, and that's why our money has value, because we control resources. And so then you end up with the petrodollar. And then you end up with people like before. There was no really speculation. There were no exchanges where people speculated on the value of currency, right? Up until Nixon did that. Then we started having the petrodollar, and because the petrodollar of how it works, you could bet the value of other currencies in relation to it. The reason that the U.S. currency is the main currency, is the reserve currency of the world, is because it keeps shit from fluctuating, economies from fluctuating too much, right? Like you have you basically have like countries keep from going like to complete poverty, having complete economic crashes, because the whole network is tied to one currency rather than everyone being independent. So the value of their money is in relation to the dollar, so that keeps it from going too wild when they have like an economic depression, right? So that was the original idea, and then the dollar used to be tied to gold. So now, the only thing, as far as I can understand, is that we have the blockchain and it's verifiable. But there's no inherent value in a blockchain. The value is the perceived value. So in my estimation, there really is nothing like, and this petrodollar thing is serious. Like China and Russia are collecting gold so they can be independent of it, right? So for me, like the idea of the petrodollar of these blockchain currencies, it's really exciting, but I still haven't heard the thing that convinces me that like, oh, it has actual value rather than just perceived value. You said yourself it was like a social contract, which is what people say about money, but that's not actually factual, right?
Yeah, no, I think you're 100% correct in everything you just said. Take it away.
I'm gonna send that. I'm gonna send it to my friend.
You probably know more about the history of money than I do. Like, definitely. Like that was great.
Thank you. And I could have gotten some of it wrong.
but I would totally agree with you that like the U.S. as the reserve currency, like the reason it has value is because of our, imperialistic tendencies and us supporting the entire world economy and things like that. Yeah, totally. But I mean, that doesn't change the fact that other currencies have, value in relation to one another and are actively exchanged and arbitraged by big banks, and that sort of supports and stabilizes their currencies in relation to one another too. Like there's a whole definitely like.
Well, that's why financial systems block countries
Yeah.
out from their money. It's like it's what's it called? Fourth wave warfare, or there's a name for it. But yeah. So then, as far as you know, would you say that there is really nothing like that back in crypto, other than just like an agreement, or is there? Maybe I'm completely wrong. Like, what is there a reserve? I guess the analogy would be like, okay, the dollar is reserve currency is the petrodollar. It's the relationships that we have with Saudi Arabia and all of them. Is there an equivalent that like backs the value of Bitcoin, or is it just belief that backs Bitcoin?
It's maybe Bitcoin as the crypto reserve currency because it is the proof of concept for the blockchain technology, which will one day become a very important technology for the world.
So then everything
it's almost like owning an equity stake in like the blockchain technology itself or something like that.
Okay, so the blockchain technology
is revolutionary. Yeah.
Okay.
Yeah.
Okay.
Yeah.
All right. And it does. I don't want to shit on that because it does have value. I'm just now starting to to really even understand what it is. And for people that don't know what the blockchain is, because there may be people that don't know, can you explain that for people so that I don't come with my butcher version?
I mean, I'll try and explain it, but it's just an open source ledger, basically, where like everything is known to all parties, right? Everything is public information. Like that whole ledger lives on every single full node of the network. And so anytime there's a change to that ledger that says that like Chris owns this, it gets reflected around the whole system and everybody sees it and it's validated by every single person. And so it's true. Yeah. Right. And so it's just like, it's this self-perpetuating mechanism where everyone is in agreement all the time, hopefully. Right.
Yeah.
So it's trustless, right? That's what they say about it,
And so far, the inherent value does seem to be the fact that it hasn't been hacked. It hasn't been, so as long as that, but it's still a concept, right? Like it's not a tangible thing. Like, so to me, there's still, it's not the same as, the US dollar being backed by like fucking resource extraction and financial system that, assimilates everything. It's like this homogenized system that all works towards eating up everything and making it part of it. And like the power of that, I think, is so overlooked, right? Like, I think like, it's like money isn't real, like has become one of my pet peeve, like notions that artists say, like, it's like, no, it's real. And it's paid in fucking blood, serious blood for things that keep the empire going, keep the facade of us being a civilized community with like indoor plumbing and all this other shit, while we like literally have to take lives for it, right? It's this is maybe the darkest CNBC has ever gotten, but but to me that's an interesting thing, because it really is like, I mean, ultimately what I'm saying is that I am not a good person, because even as an investor, like, like I invest in companies that exploit the shit out of people, right? Not because that was the intention. I didn't realize when I was 20 that I was buying into that, right? Like, but ultimately you start doing an analysis, and like when America says we're going to protect our interests abroad, essentially they mean that. They mean we're going to keep the value of money up so that you guys can keep buying shit.
So I should bring up something here. There is an entire segment of investing that is called ESG, or SRI. So ESG investing is focusing on environmental, social, and corporate governance issues. So basically, you like somebody who follows an ESG strategy will only invest in companies that have a positive, or are at least environmentally aware of what they're doing and are trying to have a positive impact, have good sort of social practices, and are supporting, basically are more liberal companies that are not feeding into oppression and exploitation and things like that, right? They treat their workers really well. And then corporate governance, where like they're transparent in the way they run their company, and they have generally reputable people running them, and people who are, on the side of good, however, you know what I mean, like progress and things like that. So there are people who only put money into companies that fit that bill. And a lot of like tech companies technically fit that bill, right? So yeah, so there is a way to invest, and generally speaking, those companies tend to outperform the market. A lot of people for a long time have said that like ESG or socially responsible investing is like something that's not viable because it doesn't perform as well as the overall stock market. But like recently, some data, like definitely like data has shown that ESG strategies are at least pegging with, if not outperforming the market. And there are services out there that will put you in, socially responsible funds.
Yeah.
Basically. So if that's something that's important to you, you can absolutely invest without like feeling like you're exploiting the shit out of people in another country or whatever,
But at the same time, and I appreciate that, and I think that that's valid, and I think it's worth, especially the part that it's a successful strategy. I think it's the lesser of evils, but ultimately the whole system is based on dollars, and so in some respect, like there is something profound to acknowledge there, right? Where it's like. The system that like I said, I'm a leftist, so I have to like sort of have this ambivalence where it's like I don't want to fucking be poor, I do want to invest, and like you said, there are more like if I had the if I really took the effort, I could do it more ethically, right? But at the same time, the whole system is, I think, is what makes us complicit, right? Because like like for example, Tesla. You could invest in Tesla, but they're pro Bolivia lithium extraction, right? You get what I'm saying? Like it never ends.
Yeah.
And so what I'm saying is like to survive, there is some level of like being assimilated by this capitalist system. And I don't think that, and I say that like, I say that since there's always going to be this gray place, like, fucking get over it. Invest, bro.
Yeah.
It's going to be better for you. Like seriously, whatever high fucking minded, and artists get into that and they're so full of shit about it. Right. Like your
MFA is showing.
I'm not an MFA.
No, not you, but just.
Oh yeah. As a saying, yeah, definitely.
Excuse me, your MFA is showing.
Yeah, totally. But yeah, man, like, and so I think that like the reality is that we would love humanity to be a beautiful thing.
Yeah.
But it's not. Yeah, I definitely support BDS. I don't know if you guys saw, but Abby Martin, a journalist who does Empire Files, just sued, I think it was Georgia, because they tried to get her to sign a loyalty oath to Israel, saying that to work in Georgia, you have to say that you won't support BDS. And like that's kind of her shtick. So then she was going to talk at a school. She couldn't talk at the school because she wouldn't sign the thing. And then the schools had a whole lecture series surrounding her as the keynote speaker, and so that whole thing fell apart. So she sued them on the grounds that like she lost money and that other people lost money as well. She won. There's like 40 states where to work you have to sign a loyalty oath to BDS. So that goes to show like the power of economics, man. Like you can, BDS fucking works. It works historically. What's it called? Boycott, divest, or boycott something, divest. I forget what it is. But I definitely encourage people to read into that because that's fascinating. You don't know that like maybe you've even signed it. It's just sort of like hidden somewhere in some shit, and now you can't even talk out publicly for Palestine. Like it's fucking wild. But the whole thing is tied to everything. It's not going to go away. You're not going to elevate yourself beyond your physical needs. So think about it. Do what you can. You're going to have to fucking sell out a little bit and you'll be able to survive, man, because no one's going to take care of you. Seriously.
Yeah.
I see you nodding, so I'm glad you agree.
Yeah. Yeah. I always say like life is hard enough. Like, pick your battles. So,
well, final question, because did this come up and I just remembered. So, as a landlord, with the eviction moratorium, I wanted to get your take on it, because my understanding is that that's one of the ways that they're using so that they can centralize power again, which is like if you can't evict the people, which the whole setup is fucked up, but essentially the setup is that if you can't evict people and get new renters, you can't pay your mortgage, right? And so then the bank collects on the property. So it seems like systematic the way that they did this, where they put an eviction moratorium but didn't give people money so that they could pay rent. So that puts the landlords. I know that like you don't seem like a fucking mega conglomerate landlord, right? And you're an artist.
I don't seem like it.
I would say that you're on our side, right? So like, can you talk about that? Because I think that that's something that's lost on people. I think that like with the moratorium ending, I think landlords are going to be vilified a lot, and I think it's important to note that like there are going to be a lot of mom and pop people that are going to suffer from this.
Yeah. I mean, it's really just an investing strategy for like individual people. Like most of the people who are landlords are just like you and me. Like it's just somebody who's like, hey, I'm trying to retire by like owning this asset and like using it as an investment instrument as opposed to like, owning stocks. Like I want to diversify my portfolio a little bit. Like it's good to own hard assets. Then all of a sudden you get tied up in this, like, wow, like you have people's lives that you're responsible for. And so you do have to be prepared for that when you're going into this asset class, right? And the eviction moratorium is problematic in a lot of ways because, it does like put a lot of people who may only have like one or two investment properties and who are not like these huge multi-conglomerates, like it's kind of like freezing them out. And then it's like, well, shit. Okay. Then if the bank takes that property, that person's going to get, like they are going to have to get kicked out anyway. It's like, it's this whole weird system where you're just kind of hurting the smaller investor. And I mean, there are ways that you can obviously work with your tenants. I mean, the one thing I will say that I haven't experienced I haven't had to evict anybody, right? Like, my approach to it is like, I try and rent to good people who, hopefully they have a stable source of income, like a job that may go away. But I'm always open to working with them on rents. Like I'm not going to just throw them out on the street. You know what I mean?
Even without
like,
the moratorium.
One, you have to be a human. Yeah. Even without the moratorium. And then number two, even through all of this, like I didn't see like people were they were okay. Like they paid their rent on time. And I think that that's what we saw during COVID for like 90% of people who were like not slumlords, like just trying to like wring money out of people at the very bottom. You know what I mean? Not that there's anything wrong with owning a very like low priced property, but like if you don't take care of it well and you're charging for it and you're not doing the maintenance on it. Yeah, exactly. Like there are people who do real estate very wrong and they're just like, they don't do any work. They don't maintain their properties. They don't make livable places for people to stay in. So I guess what I'm trying to say is like, if you rent to nice people and you yourself are a nice person, like usually like things will be okay. If you're not trying to like exploit somebody, then
I think
hopefully things will be all right. So
the reason that I bring this up is that it is a concern because like, I think that it ends up centralizing a lot of power in slumlord and can lead to slumlord antics, right? Like right now we have a housing crisis and how the fuck are rents so high? Right? Like the demand is eventually going to drop out, but like, especially in Los Angeles, it's fucking insane. You know? And right now there's a battle.
I have no idea how to rent in a larger city. Like Boise is a very small city. I have to say that up front. Like, I don't know anything about investing in LA. I'm sure that's a totally different story. I'm sure the whole, like, be nice to your tenants is like a totally different thing on that level. So I don't really know about that, but yeah.
Yeah.
So
no, definitely, and well acknowledged. But but like right now, I mean, I don't think there is going to be a lot of space for mom and pop people out here. like like people that just own random properties. I mean, I think that a lot of that is going to go to the wayside. There's a lot of illegal flips happening in this area, so people are buying houses, they're not getting permits, they're just ripping everything up. It's like over here it's a fight against gentrification, right? Like over here there's an episode we did with the Lincoln Heights neighborhood council out here, and they have really interesting, they do really interesting work. They're in the neighborhood council, and they're talking to the city council, and the city council's still just like, fuck you, no, we're gonna keep building this thing. There's Gil Cedillo just completely was like, no, we're gonna move on. We're gonna approve this new money. So they've approved some crazy amount of millions, and then they were just about to approve another one. Fernie Ferns is her Instagram handle. It's that's only how I remember her. But so she was like, there's a video of it. She was talking about it and was saying hey, no, we've already done this, and this is gonna displace people. And he was just like, hey, we've already covered this. There's a lot of activists talking a lot of shit, blah blah blah. We're gonna keep move on, and that's it. And that's it's wild, because you think that things are gonna get better because good people get elected into a minor place, but there's so much fucking power, real estate power over here. People think of lawns as green space, where it's lawns are super fucking wasteful for the environment because of water usage. Out here it's and so you have a lot of these old-timey hippies from the fucking, in their 60s, whatever, boomer generation people that have this complete oh man, don't get me started on boomers, how they think of the planet. But anyway, LA is wild. So I do want people to be aware that the victims aren't just the tenants. There are landlords being fucked, and it's by design to centralize power. So anyway, man, anything that you'd like to part on? Any thoughts that you'd like to share with people? Maybe a wrap up of invest, stay in school.
Stay in school stay in school, but don't let school you. I don't know. I'm an artist too. I don't know.
No, but I mean, they'll see that on the Instagram, and we're definitely gonna plug your stuff so people can see you. But I think that it's helpful to have an artist, that has all the pretensions that we do. You're part of the team, but you're hey guys, watch yourself, because that's it's an important myth to be debunked, that the fuck being a struggling artist, it's not good.
Too long struggling. But I mean, try and pay yourself in the form of future dividends whenever you can. Don't just save, invest. Set yourself up for the future. So
cool, man. And people can find you at Wildlife Plates.
That's right. Yeah.
Okay. On Instagram, your website. You want to plug that?
My website is www.theadlerindex.com.
Cool. And you shoot large format, and right now, from what I see, you've got a lot of stuff where you're shooting plants, plant portraiture, I would call it. Even though that's not a term. And then and landscapey stuff, right? A lot of textures, a lot of high res imagery, which is not the correct term, but
I would, I mean, when I give an artist talk, I say I do plant portraits and landscapey stuff. That's basically how I describe it. So.
Oh, maybe I just read it off of your bio, and I thought I nailed it.
Yeah. No, exactly.
Cool.
I don't know. There's more info about me on my website. You can look at my images. But photography, a lot of black and white photography, a lot of stuff that kind of looks like straight photography, but has some concepts behind it. So,
cool. What kind of concepts? All about investing? No, I'm kidding.
All about investing. Yeah. It's about growth.
All right, and we're at What's My Thesis on Instagram. I'm at Javier Proenza. You can find us on. You can listen to us. Don't stop listening to us just because we have a YouTube. Because we're much better for listening of a listening companion than we are a visual companion. We just have the visual because it's modern times. But at What's My Thesis, and you can also comment us on YouTube and watch us there. Thank you so much for your time, man. And I do appreciate that you use this like time to be to be of service, because it is important information. And I think that it was fun for me to reveal that I know some.
Yeah, man. It was great talking to you. Thanks so much, Javier. I appreciate it.
All right, man. We'll definitely be in touch. And thank you guys for listening.